I've walked through a lot of markets in my life, kid, and each one had its own smell, its own rhythm, its own way of teaching lessons that stayed with me long after the money came and went. When people talk about the markets, they say it like it's a single creature, some uniform beast that behaves the same no matter where you meet it. But that's not how this world works. Stocks, Forex, crypto, they're like three very different cities. You can only understand by living in them long enough for the streets, the noise, and the shadows to etch themselves into your memory. My journey started with stocks, the old battleground, the place where generations of traders carved their stories into the fabric of American capitalism. Back when I started, the screens were slower, the spreads were wider, and every order felt like sending a message through a tunnel and hoping the market gods accepted it. Stocks were patient but unforgiving. They moved with the weight of the world behind them: earnings, news cycles, global sentiment. When a stock moved, it felt like the turning of a tide, something bigger than me shifting in the distance. My first years were full of rookie mistakes, chasing breakouts too late, holding losers too long, expecting a company to care about my feelings. Stocks taught me maturity. They taught me that markets are built on human behavior, but shaped by massive forces you can't see. They taught me to respect structure, timing, and the long game. But as time went on and the world got faster, I found myself pulled into Forex, the 24-hour beast that never slept. If stocks were like an ocean tide, Forex was a storm, violent, unpredictable, and beautiful in its own ruthless way. The first night I traded Forex, I remember staring at the screen at 2 a.m., watching EUR USD dance like it was drunk and angry at the same time. No earnings reports, no CEOs, no product launches, just pure macro forces colliding with trader psychology in real time. In stocks, you waited for the bell. In Forex, the bell never rang, and that silence could drive a man crazy if he let it. I learned quickly that Forex required a different version of me, a calmer version, a disciplined version. Because volatility doesn't care if you're tired, or emotional, or half asleep with a coffee that went cold 3 hours ago. I blew more than one account in those early Forex days, thinking I could outsmart liquidity pools or predict central banks like some kind of oracle. But the market humbled me, reminded me that speed isn't a sign of opportunity, it's a sign of danger, unless you know exactly what you're doing. Over time, though, I found a strange peace in Forex. It forced me to build habits that eventually saved my trading career: risk management, strict stop losses, the willingness to walk away even when pride wanted to stay. And then, years later, just when I thought I'd seen every kind of market insanity the world had to offer, crypto arrived like a meteor. Kid, I've never seen anything, and I mean anything, behave the way crypto behaved during those early years. Bitcoin in 2013 moved like a wild animal that had just broken out of a cage, and traders were running after it with nets and hopes and absolutely no understanding of what they were chasing. Some markets teach you patience, some teach you discipline. Crypto taught me humility all over again. The volatility was vicious. Watching Bitcoin rise 20% in a day felt surreal. Watching it fall 40% overnight felt like being punched in the jaw by a ghost. There were no earnings, no macro data, no open or close, just pure speculation fueled by dreamers, gamblers, geniuses, and absolute fools, all standing shoulder to shoulder in the same uncharted territory. And there I was, an old trader stepping into a young man's game, trying to apply decades of experience to something that didn't obey any of the old rules. My first crypto trade wasn't calculated. It wasn't elegant. It was curiosity, mixed with skepticism. I put in a small position, smaller than my pride wanted, bigger than my caution allowed, and watched it double in a way that felt almost disrespectful to the concept of trading. But the real lesson came later: the crash. The panic. The realization that crypto could make you feel like a genius at sunrise and an idiot by midnight. That's when I learned the truth. Every market is a teacher. But crypto is the kind of teacher who slams your desk, flips your chair, and asks if you're still paying attention. Despite the chaos, there was beauty in it. A kind of raw, untamed energy you don't find in traditional markets anymore. Innovation mixed with madness, opportunity mixed with landmines. And through it all, I felt something I hadn't felt in years, a sense of adventure. Looking back now, after walking through these three worlds, I can tell you this: stocks taught me foundation, Forex taught me discipline, and crypto taught me adaptability. And if you're smart, kid, you'll explore them the same way, not chasing thrills, not running from difficulty, but learning the language of each one until you understand the way they breathe. Because each of these markets has its own heartbeat, its own lessons, its own way of breaking you down and building you back up. And the real magic happens when you finally realize that the more markets you explore, the more you discover about yourself. And in that discovery, you start to understand. And you start to understand that the market isn't just a place where prices move and charts dance. It's a world where each environment reflects a different part of who you are. And as I moved deeper into my career, exploring those three landscapes taught me more about myself than any victory or defeat ever could. See, kid, once you've lived long enough in stocks, Forex, and crypto, you begin to notice how each market pulls at a different string inside you. Stocks test your patience, the slow grind, the waiting, the fundamentals that force you to think like an investor, even when your heart beats like a trader. Forex tests your discipline, the endless hours, the constant motion, the temptation to overtrade because the market never sleeps even when you need to. And crypto tests your ego, the wild swings, the insane gains, the brutal crashes, the illusion that you're smarter or faster than millions of other people chasing the same digital dream. After decades of walking through these worlds, I realized something I wish someone had told me earlier. A trader isn't defined by what market he chooses. He's defined by how he behaves inside each one. I remember a period when I tried to force my stock trading mindset onto Forex, thinking structure and patience alone would save me. Instead, I got steamrolled by volatility that didn't care about my old habits. Then I tried bringing my Forex speed into crypto, treating it like just another currency pair that happened to be digital. I was wrong, painfully wrong. Crypto punished every assumption I carried into it, like a young fighter proving to an old boxer that experience means nothing when the rules have changed. But as I adapted, something shifted. I started to see the common thread that ties all markets together: human emotion, fear, greed, hope, doubt. They show up everywhere, just dressed in different clothes. In stocks, they move slowly, like tides rising quietly until they drown entire sectors. In Forex, they strike fast, sharp, like lightning in a storm. In crypto, they explode, unpredictable and relentless, like fireworks thrown into a crowd. And the more markets I explored, the more I realized that the goal wasn't to master each market, it was to master myself inside each one. That's when the real transformation began. I developed what I call market mirrors, habits that kept me grounded no matter where I traded. A plan before action, a reason before risk, a limit before loss. And above all, a willingness to admit when a market wasn't speaking my language that day. You see, kid, the worst mistake a trader can make is believing he has to conquer every market. You don't conquer markets. You listen to them. You learn from them. You respect their personalities. Stocks are like old giants, slow to move, heavy with history. Forex is like a restless river, always moving, always changing. Crypto is like a wildfire, beautiful, dangerous, and capable of turning the night sky into a battlefield. Each one can make you rich, break you down, humble you, or teach you something you didn't know about yourself. And that teaching never stops. Not after 10 years, not after 20, not after 30. Because every time I thought I finally understood one market, it showed me a new version of itself. Every time I thought I had outgrown mistakes, the market reminded me that experience isn't an armor, it's a compass. And even a compass can only guide you if you're honest enough to follow it. But if there is one thing, one truth I've carried with me from one market to the next, it's this: the more you explore different markets, the more complete you become. Not because you master them, but because they force you to confront parts of yourself you would have never noticed otherwise. Your impatience, your pride, your fear, your stubbornness, your hunger for certainty. in a world where certainty doesn't exist. And as the years stacked on top of each other, like candles on an old man's birthday cake, I realized that exploring different markets wasn't about diversification or opportunity, it was about evolution. A trader grows by stepping into unfamiliar territory, by listening to markets that speak with different accents, by learning new rhythms, and unlearning old habits that no longer serve him. And someday, if you walk far enough through these worlds, you'll look back and understand that the journey wasn't about stocks or Forex or crypto. It was about the version of yourself that each market carved, polished, challenged, and strengthened, until the trader you become is someone you barely recognize from the kid who placed his first trade. And you'll know deep down that every step into every market was leading you toward a wider, clearer, steadier kind of wisdom that no single market could ever give you on its own. Because in the end, what you're really exploring isn't markets at all. It's